Our procurement decisions were mostly based on the unit cost for each production plant type calculated using factors such as fuel and carbon dioxide allowances. Using the unit cost, we decided whether to sell or purchase power plants in each round. Although keeping coal plants sounded profitable in initial stage, net profit started to decreasing in later rounds with the increment of unit cost. Therefore, we decided to sell coal plants and took advantage of exchange market to reduce losses and make more profits. Keeping natural gas was a good option as the unit cost is comparatively low in early rounds while making district heats, but in the last round, the calculated unit cost is increased. Therefore, we decided to sell few natural gas plants. Considering spot prices and benefits such as green certificates, and we purchased wind parks almost every round.
After studying the description, we realized that different strategies should be employed for different market segments. Despite high exchange market prices in the initial rounds, we didn't go for higher prices in the large-scale industry due to its price sensitivity. As the household and electric heating sectors are directly influenced by advertisements and direct sales, we invested more in marketing which allow us to go for higher prices, making those markets profitable. For small-scale industry, we chose prices close to export price with higher direct sales because that industry is more sensitive to direct sales. For the wind market, we always went for higher prices as they were not price sensitive and the demand was growing considerably at each round. In the last rounds, as the wind market became price sensitive, we had to increase advertisement cost accordingly. All the prices are determined based on export prices while adjusting the advertising and direct sales cost to maximize profit margin in each market segment.
It took us a few rounds to realize the full potential of the futures market. At the end of the preliminary rounds, we had a solid understanding as to how the spot prices are going to fluctuate owing to the market conditions. We always assessed the worst case scenario and took precautionary measures to mitigate any possible loss before finalizing the number of units to purchase or sell. The market conditions in the final rounds and the preliminary rounds were quite similar. This was the icing on the cake as it gave a strong hint as to how much the actual spot prices are going to vary from the expected spot prices. Moreover, we realized that in each round, there is an optimum number of units that maximize the derivative income. Understanding these minute but important details let us receive a significant derivative income even under blindsided market conditions in the last round.
We continuously attempt to optimize the key financial ratios of our company, including profitability ratios such as gross profit ratio and ROCE, liquidity ratios such as current ratio, shareholders ratios such as equity ratio and CTSR, and efficiency ratios, while maintaining healthy economic profits at each round. We were the undisputed lead runner of each key financial indicator in all rounds. We were able to continuously pay debts to our creditors because of our financial stability, and we were also paid dividends as necessary to our equity shareholders in a strategic manner. Our strategies were inspired by well-informed financial calculations and predictions, since we have maintained our own predictive income statement, cash flow, and a balance sheet. In these statements, we numerically predicted the financial projection of our company with a possible confidence level in each criterion.
The spike in the spot prices might indicate an unexpected power crisis. This will increase the demand for coal and natural gas plants, plummeting the unit cost in the upcoming years. With this decrease, along with the carbon dioxide capture technology, companies will be tempted to invest more in coal power plants, and if so, the supply would increase in the next few years, bringing down the spot prices. Even though the demand for the renewable energy market is flattening in the late rounds, it is still at a significant level that it is not advisable to sell wind parks in the next few years. Companies should follow an optimized marketing strategy for each market type, considering the behavior of the market segments.
If there is a significant disparity between unit cost and spot prices, with unit cost being the greater, the market prices should be decided giving priority to the unit cost. Companies should always look for long-term loans instead of short-term loans due to the increased premium short-term loans. Since investors insist a high return on equity, it is always better to pay dividends to equity shareholders in coming years for the stability of company.